Good morning. I'm Julio Melara, President and CEO of the Business Report, and I'd like to welcome you to Business Report's Intelligence Webcast. We're honored that all of you are joining us this morning. On behalf of the Business Report and all of our publications, we're excited that you're joining us. Today, we hope to bring you more clarity to the PPP with the latest information, explaining the federal coronavirus aid package and answering questions, because we're all in this together. You know, I also want to thank all of you for your leadership here in the community and in the state as we try and stay calm and make lemonade out of lemons. We're going to come out of this thing a lot stronger. But before we get started, I want to thank Campus Federal Credit Union for sponsoring today's webcast and introduce the CEO of Campus Federal, Ms. Jane Verret. Jane?
Thanks, Julio. Good morning, everyone. As we all continue to navigate this new normal, Campus Federal is committed to our community and our members while we're all adjusting to all the disruption around us. As Louisiana's top business credit union, our team's working hard to assist our members who are our business members with the relief options provided by the CARE Act. So we're really excited to be a part of this today and looking forward to what all we're going to learn. So have a great day, everybody. Thanks.
Thank you, Jane. We appreciate you. Also want to thank Congressman Garret Graves for being generous with his time and an encore appearance during this hectic time. Now it's my pleasure to introduce Business Report's Executive Editor, J.R. Ball, who will moderate our session this morning and introduce our other panelists. J.R.?
Thank you, Julio. And good morning, everybody. We're fortunate this morning to have with us Congressman Garret Graves and Renée Bender. Congressman Graves represents Louisiana's 6th Congressional District in the U.S. House of Representatives, serving more than 750,000 residents across 13 parishes, including most of Garrett's hometown of Baton Rouge. Now, during his short time in Congress, Graves has been instrumental in enacting policy changes and securing funds for issues such as levees, flood protections, coastal issues, and reforms to the Corps of Engineers. Moreover, he secured full funding for the Comite Diversion Canal and other flooding protection projects, as well as much needed dollars for critical infrastructure projects in Baton Rouge. He also fought to change federal law to fix the so-called duplication of benefits fiasco following the August 2016 floods. Congressman, welcome. Thank you for joining us.
Hey, thanks, Jan. Great to be back with you.
Renée Bender is a professional staff member for Chairman Marco Rubio on the U.S. Senate Committee on Small Business and Entrepreneurship. In her capacity on the committee, Ms. Bender manages the SBA lending programs, financial services issues, as well as the Small Business Investment Company, Small Business Innovation Research, and Small Business Technology Transfer Programs. She previously served in the office of Senator Mike Enzi, and before that, Senator Pete Domenici. Again, thank you, Congressman Graves and Renée, for joining us this morning. Very quickly, our format is we're going to begin by asking Representative Graves and Ms. Bender some quick overview questions just to kind of get us going, largely on the PPP, also the EIDL, and some changes in the unemployment compensation. And after we do that, we're going to open up the conversation. If you have a question, and thanks to the many of you who emailed us with your questions in advance, it's going to be very helpful in that sense. But if you have a question as this conversation unfolds, please use the Q&A function at the bottom of the bar, and we'll try to get to as many of the more relevant questions as possible in the time frame we have. Look, we've got 45 minutes. Some of the more hyper-specific questions that might just apply to your company, while really important, given the amount of people on our webcast, you know, we may have to try to find an answer for you off air on that one. Lastly, we'll be posting a video of this webcast later this morning, and there will be more details on that as well as a link in our daily report. All that perfunctory information out of the way, let us begin. Congressman Graves, the Treasury Department has been making numerous tweaks and adjustments on guidance regarding the $349 million Paycheck Protection Program. Can you kind of provide us some clarity as to what's happening right now with the numerous banks? There seems to be confusion with banks as to what are the rules, how much risk are they assuming, as well as small business. In general, there seems to be a lot of confusion and growing frustration by the process.
Sure. Look, JR, a great question, but I think we have to put this whole thing in perspective. This program didn't even exist, wasn't even really conceived a few weeks ago. And I got to give a huge shout out to Senator Rubio and being a longtime recovering staffer, to Renee as well, for all the hard work that they've done in putting this thing together. This really is a genius program that was very innovative, that was thrown together very quickly. The Treasury put this thing online within 1 week's time, something that started from scratch. And as of yesterday, according to Secretary Mnuchin, over $90 billion in loans processed, with another $100 billion in line within the banks across the country. This is absolutely extraordinary what's happening in regard to the program. Are there imperfections? Absolutely. And we could either get it perfect and take a year to do it, or we could continue to have an evolving process as we're seeing right now. Very importantly, JR, the SBA has issued guidance, Treasury has issued guidance saying that as long as you followed the rules that were in place at the time, then you will not be held accountable to any sort of change in their rules as they continue working to perfect the process. Over 30,000 banks approved, and every single bank in our district that has reached out to our office, we've been able to get them online and give them access to the system. So I just want to continue to urge folks to continue to move forward with their application process, to access this important program that's going to help us get through this dip in the economy.
Renee, are you familiar? What steps are sort of being taken to get answers to the banks? Because a lot of the questions we get tend to deal with information the banks are telling small business owners, and there does seem to be some confusion among lenders, particularly at the regional banking level. Are you aware of steps that are meant to get additional guidance out to these lending institutions?
Sure. Thank you for the question, JR, and thank you for having me today. Absolutely. As the Congressman mentioned, this has been an unprecedented effort to get this program online and get banks the information they need and borrowers the information they need to be able to get much needed funds into the hands of small business owners. And so we are in constant contact with the Treasury, with the administration, with the SBA to ensure that we are elevating those questions that especially that lenders have to help them be able to approve, close and disperse those loans as quickly as possible. So Treasury and SBA have issued a number of guidance documents, facts. They've issued 2 interim final rules, one on the program generally, and one dealing specifically with the nonprofit organizations that we made eligible for these loans in this program. And so certainly there are continue to be questions, and we are working just around the clock to make sure that we're being responsive to our lending partners who are stepping up to the plate to help get these funds to small businesses. So if there are questions, or we're happy to engage with the agencies that are implementing the program on those things.
And JR, if I can just interject very quickly, even this afternoon at 5 p.m., we're hosting a conference call with SBA officials, with scores of banks across the state of Louisiana, and folks in the Financial Services Committee to continue to work to get feedback and perfect this process.
Just to jump ahead, one of the questions we've gotten online is the SBA actually approving applications right now? The big bank story is no, but some small banks claim to be getting approvals. Do we know, is the SBA actually approving at this moment, or where are we at in that process?
Could you clarify the question, JR, in terms of approval versus closing disbursement? Are they asking if they're just taking the applications and moving them through the
and I guess
portal?
moving them, the way the question was phrased, approving applications. So I'm going to assume that means the SBA has looked at it and said, you know what, we're going to approve this loan, whether the money has started to flow back through the government to the bank, to the applicant. I guess the question is, are applications being given the yes stamp at this point?
Yeah, absolutely. I think that points to the Congressman's comment about over $90 billion in approvals. So that would be the loans that have been entered into SBA's, what they call the E-Tran system, which is the system that processes these loans, and they're getting approved. So there's over $90 billion in approvals as of yesterday. So absolutely.
And JR, one of the reasons this is taking a little bit of time, as the Secretary said, on the very first day that this program was opened, Friday last week, and Ms. Bender can correct me on my stats, but I think they said that in the very first day, they received more applications and processed more applications than they had in the entire all of 2019 under the SBA 7A program. So look, do we need to add capacity? Yes, and it's happening on a daily basis, but we're seeing extraordinary numbers already.
Absolutely. The program in fiscal year 2019 for 7A processed about 66,000 loans. So just in the first day, Friday to Saturday, we saw about 70,000 loans go through the E-Trans system. So certainly the SBA is working around the clock to continue to build capacity. And though the system may have been slower at certain times, they have been working so hard to build that capacity that the E-Trans system has never crashed or anything. It's just, trying to manage that volume is going to continue. We've got to continue to build out that capacity.
And to follow along with this theme, and I do want to move into some other areas here shortly, but another question, many banks, says this person sending in, many banks are refusing to process PPP applications unless you're an existing customer of that financial institution. Is there anything Congress is doing to hold banks accountable or to say you've got to open this thing up to all small business people?
JR, it's a great question, and it's something that we're all working on right now. It largely has to do with the Banking Security Act and the liability or the onus on banks that are required to confirm the identity of folks that are applying. And this all goes back to the aftermath of September 11th and preventing terrorists from misusing our financial systems. The SBA has already had hackers or folks try and come in and create false identities and false accounts. And so the reason that they're first servicing existing customers is because they've already confirmed the identity of those folks that have existing accounts, whether it's a credit card account, a checking account, or what have you.
Okay. Another Congressman, I'll just stay with you. Where are we at right now? What's the likely timeline for getting a decision on the Treasury Department's request that an additional $250 million be allocated to the PPP? I mean, the fear is the initial allotment of $349 is going to run out. Obviously, that's why the $250, but it seems like there's some there may be some political maneuvering that may hold up the process with this latest round.
Yeah, JR, you're exactly right. So there was $349 billion that was approved in the first round. I remind you, this started Friday last week. The President and Secretary Mnuchin have requested an additional $250 billion. We have worked in both the House and the Senate to try to negotiate through virtual channels a unanimous agreement where we could just unanimously approve this without having to have a single hiccup, a single second of delay in getting resources out there to the banks. Unfortunately, as you saw last time we had a large negotiation on coronavirus, you've seen people step in and try and politicize this. Unfortunately, there's nothing political about the coronavirus public health emergency. There's nothing political about the need of our small businesses and our employees out there to need the paycheck protection that this program provides. And so, look, there are imperfections here in this program, as you've discussed, and clearly identified, accurately identified. But the bottom line is these resources are needed immediately, and we don't need to play political games and allow for partisanship to delay assistance in helping these businesses stay afloat, offering them a lifeline through this dip in the economy we're seeing right now. So there's no reason other than politics why this shouldn't be approved actually this week, as far as I'm concerned. And if there is a single second delay in this program because it runs out of money, it is because of politics, and people should be held accountable for that.
Do you think they'll be able to do it on a unanimous voice vote, or are they going to have to do?
We're working to try and secure that agreement. It looked like we were moving in that direction, particularly in the Senate. You may have seen more recently where Speaker Pelosi has come out and issued a list of demands. On the one hand, it is good that at least her demands are more coronavirus related, as opposed to last time we had a negotiation where she was demanding funds for the Kennedy Center and other things that were completely irrelevant to coronavirus. And so I do think that we'll be able to secure an agreement by next week. But if I'll say it again, if we have any delay in this program, people need to be held accountable for their political games.
Thank you. We're going to get right back to the PPP. I do want to ask Renee a question about some of the key changes that have been made to unemployment insurance as part of the CARES Act. Can you sort of give that 50,000-foot overview, as well as discuss how those unemployment benefits interact or do not interact with the PPP?
Sure. Thanks for the question, JR. So the unemployment benefits that were included in the CARES Act will provide $600 per week of additional benefits on top of any state benefits that an unemployed person may be receiving. And it also extends the amount of time that a person may be on unemployment by 13 weeks. And so that was a large augmentation to what was originally in the bill. So I think the main thing that I would point out is that the Payroll Protection Program was drafted with the intent of keeping the employer and the employee tied together, keeping that employer and employee relationship, and allowing for a process for, as we come out of this public health emergency, for workers to be able to return to their jobs and to help the economy bounce back faster. So that was really the intent of what we were trying to get at with the PPP. And I would just say that in the process of getting the bill passed, as negotiations continued, the unemployment benefits that were added pretty much on the last day before passage. This was a very last minute negotiation. And so there had not been this dual tracking of PPP and this level of unemployment benefits. So I think it'll remain to be seen on, frankly, how the two interact with one another. But the chairman's goal is certainly to keep employers and employees tied together and keep those businesses afloat during this time.
And you can probably file this under the category of no good deed going unpunished. But we're now getting feedback, particularly from restaurant owners, who have some concerns and say, look, like in Louisiana, you get 247 and now in 600. So you're now making $847 a week. The concern there is that works out to be a little over $21 an hour on a 40-hour week. The theory is that once the economy starts to come back a little bit and they get to have the ability to reopen, they fear they're going to have some challenges getting the employees to come right back, because they're saying, wait a minute, I'm making more on unemployment than I would be making working at, Bill's restaurant. So restaurant owners are nervous about how they're going to get their workforce back under that scenario.
Sure, I think that's a valid concern, and one that we'll have to continue to work through. Certainly, the PPP program, we do take into account restaurants in a couple of ways. First, in allowing them to be exempted from certain rules that would inhibit their ability to get the loans. So we have some exemptions in there for restaurants, understanding that there were certain industries that were very much hit right away with public health closures. And we also account for tipped wages in both the calculating of the payroll cost and for the forgiveness portion of the loan. So trying to get to making sure that those workers get the compensation that they would get at work. And the requirement, we do have some provisions in the bill that would require any business to rehire employees, understanding that we're asking them to bring people back onto the workforce. There's no specification as to this has to be the same employee that may have found another job, or there's all those types of variables that we did not want to prescribe and make it difficult for business owners to meet those requirements. And so I would say that there's some flexibility in there for people as they're rehiring.
JR, if I can add to that very quickly. Number one, we sent a letter to Secretary of Labor last week asking him to put the right protections in place that don't incentivize people to stay on unemployment, actually incentivize them to go back to work. Number two, the bill has an important provision that allows for short-term compensation. So if a restaurant owner or business owner simply wanted to reduce the pay of an employee because they couldn't afford to pay them the full salary, they could get partial unemployment benefits. That way they stay on their company benefits such as healthcare and retirement, yet they get a partial supplement from the unemployment program. And we've asked the governor to create that short-term compensation program option in Louisiana. Lastly, there is something called a Form 77 that when a restaurant owner or an employer offers a job back to someone who was laid off or currently unemployed, it would effectively turn off their unemployment benefits because they were offered a job back.
Thank you. Pivoting back towards PPP, on the forgiveness portion, at one time, it seemed like forgiveness was going to be based upon headcount. But now some are saying it's not so much headcount, but total payroll cost. there seems to be some confusion. What's the distinction, or what is, really, what is the guiding factor there? Is it headcount or payroll cost?
Well, I'll let Renee correct everything I screw up, but bottom line is that provided that you spend 75% of your loan on payroll cost, it is forgivable effectively. The objective is to bring your payroll or the number of employees back up to where you were before, but you spend 75% on payroll and the remaining 25% or less on utilities, rent, and mortgage interest, then you should be eligible for forgivable loan. Ms. Bender, you want to correct my my screw ups there?
No, you got it exactly right. And to the Congressman's earlier point, we're trying to provide some flexibility in there if there does need to be any slight decrease in salary. So we're not dinging business owners who are really struggling right now, who may need to make those decisions, but really are trying to keep their people on board. We really drafted this with the understanding that small businesses want to keep their employees. That a lot of times in a small business situation, your employees are, you know them, you know their families, they're a part of your community, and there's that inherent desire to keep employees on your payroll, and they're going to do what they can to do that. So with that understanding, to the Congressman's point, 75% for payroll costs, and that goes towards your forgiveness, correct?
These may be some quicker hit questions for everybody. If a business pays independent contractors for services and issues them a 1099, can that business include those costs or payments in calculating the average monthly payroll for the PPP loan program?
Once again, I'm going to subject myself to correction here, but this was a bit of a confused point because SBA had issued some guidance that seemed to conflict with itself a little bit. It seems where they've landed is that no, they can't. They can't count the 1099 employees because those employees or those 1099 contractors can actually apply for the PPP directly on their own. There was one clarification that was issued on April 6th that indicated that if you have a payroll company that effectively processes your payroll, then an employer would be able to apply for a PPP loan, even though they use a payroll company and don't directly pay employees, but that would be a different scenario than a 1099.
That's correct. Those 1099 workers, the guidance that has come out from Treasury and SBA is that they will apply directly themselves and so would not be counted towards the payroll costs or the forgiveness amount for a business owner. And the application period for those 1099 workers, your self-employed, sole proprietors, is opening tomorrow. So we expect further guidance from Treasury and SBA on that front.
A quick one before I jump into a couple of real estate related questions. Is the $10,000 EIDL grant taxable? Do we know?
It should. I don't think I can answer that question. If I can tell you that the borrower may take an EIDL grant, that $10,000 grant, and also apply for a PPP, and that EIDL amount would just be subtracted from their forgiveness amount. And in the PPP program, we have a provision on taxability that would basically say any forgiveness amount cannot be applied toward gross receipts for IRS purposes that would ding them on the taxable side. So we can follow up on that front to get an answer to that.
Okay. A person in the real estate industry asks that this individual does not have a set salary and work as contractors in many cases. And because his or her income is based on real estate market activity, that person is being told that these types of businesses are not eligible for PPP loans at this time. So I guess he's just it sounds like he's a contractor and he's just sort of making money based on, what's happening in the ups and downs of the local real estate market. He's being told he's not eligible for the PPP, but I thought, Congressman, you may have indicated a different answer a minute ago.
Yeah, I got to tell you, that's not my understanding. And my understanding is that the program recognizes that you have some folks that may work in an unconventional type business where you don't have a set paycheck every week or every month. And what they allow folks to do that are self-employed, for example, along those lines, is they allow you to look back over 2019 and look at different draws or income that you received during that period of time, and then average it out over a 12-month period. But I'm going to, again, subject myself to any corrections that Renee may have.
That's correct. And I think this comes down to really guidance from Treasury and SBA. I know there have been some questions or some initial guidance that's currently out on how you would calculate payroll costs. And I think that's what when I said additional guidance for those who are self-employed or contractors coming from SBA and Treasury, is for them to really outline how those folks will calculate their payroll costs if they don't have, if it's not as simple as just pulling your taxes or pulling different, so how they determine like your net cost. So that'll be something that has to still be worked out, and SBA and Treasury will need to provide additional guidance, but certainly the bill provides for folks who are contractors and self-employed and all of that to be able to apply.
And some of the confusion may come down to, how is the company incorporated? And there seems to be a lot of back and forth between an S Corp or Schedule C or how you're set up. And there's some concern that, people like barbers, hairdressers, because I think a lot of them file as Schedule C, they're being told they're not eligible for the program.
I think that's something that we can certainly take up with the agencies if that's the feedback that folks are getting. And I do know that your area has a great district director at the SBA as well that we can certainly be in touch with to clarify those questions. But as I mentioned, the bill does cover those that are self-employed, those that, independent contractors. So I think maybe too that this is an issue of, this is a sort of step outside of the norm of what SBA has generally done in terms of loans that they provide. And so there's going to need to be more guidance on that front. And I do expect, as I mentioned, those loan application processes opening tomorrow, that there will be additional guidance. And so as we work through that process, when that guidance comes out, we're happy to make sure that it gets all of you to share with folks that have these questions. And we'll be dialoguing again with the agencies to make sure that these folks have some clarity on those things.
And just to be clear, the law is absolutely, the congressional intent is that absolutely those folks are eligible.
Okay. So whether you're Schedule C or S Corp, that really should not be a distinction in the long run. And if it is now, the intent would probably be to flatten that or to eliminate that barrier.
As Ms. Bender said, I think it's the fact that this program is opened up to a new category of folks that previously were not eligible under other programs. And so they are sort of, as they say, building the airplane as they're flying it to some degree. But they did go to lengths in the text of the law that actually try and describe some flexibility in how to quantify income for those that may be in an unconventional type job.
And given the fact this was a brand new program, I mean, it was created on the fly in a very short period of time. And then you couple that with overwhelming interest, and there's, limited funds at the moment. Is there any chance the PPP timeline will be extended at this point?
Well, I think it's too early to make that call. Obviously, the real priority we have that's at the door right now is getting additional guidance or clarity to those that will be eligible to apply for the program starting tomorrow, the new category or class of self-employed folks that will be able to apply tomorrow. Next is immediately focusing on replenishing the program, the additional $250 billion. Once we see how that drawdown occurs and over what period of time, we'll take a fresh look at the June 30th expiration date and determine if there's some adjustment that's needed there or not.
If a business gets a PPP loan, can it utilize the payroll tax credit related to the, and this may be a Renee question because there's got a whole bunch of acronyms about to get flying out of here. But if you use the PPP loan, can it utilize the payroll tax credit related to the FFCRA and the EFMLEA? I don't know what that means in English, but I'm hoping one of y'all do.
Well, my interpretation of that is, can you also benefit from the paid leave provisions that were provided in what we've kind of called the phase 2 bill that came out of the House? And the answer is yes. You are still able to get a PPP loan if your business has taken advantage of those paid leave provisions in that bill. The stipulation there is that you would just deduct that amount from your costs. So in other words, you are able to benefit from that paid leave, but since this is also payroll costs, including paid leave, paid medical, sick, family leave, and insurance premiums that are in the PPP, you wouldn't be able to get both of, to double of those benefits. So that would just be subtracted.
Probably on another technical question. Under the PPP, can the borrower pick any 8-week period between February 15th and June 30th of this year as the basis for the forgiveness on payroll?
So the guidance that I have seen from the Treasury indicates that the covered period would begin when the loan is dispersed, start at that 8-week period. I will say that we included in the law some flexibility there. So this is where we really have to, when we are having conversations at this point, when the implementation process is underway, that we have to couch a lot of what, at least what I say, is how SBA and Treasury will interpret the law and what that means for the regulations and the guidance they put out. So,
but Jay,
go ahead, Congressman.
I was just going to say, Renee, that I know that a lot of us in Congress are working to try and provide a little bit of flexibility there. There has been a rush on the program because folks want to try and get access to dollars before the program may run out of funds. And we want to make sure that we provide ample time for businesses to ramp back up and not force them to have to spend money that doesn't make sense to spend because their business is not back up and running again. So we are working to provide some flexibility in that.
And Congressman, I'll throw this one, and really I'm probably taking about 15 or 20 different questions that have come in. They all seem to be on the same general subject, but you as an elected official, you're used to having to dodge and weave on on answers here. But, and we've sort of addressed some of this a little bit, but just the sense of these questions is just the uncertainty, not being able to get enough information from their banks. The banks keep telling them one thing, then they hear something else somewhere else. They can't find out where they're at in the PPP application program in terms of, hey, my bank says, they've taken my application, but I can't get an update on where it is. Can I refile somewhere else? Without getting into all 20 questions, just in a general sense. And again, I know we touched on this a little bit at the beginning of the webcast. To sort of talk to those small business owners out there that just seemingly don't understand or can't comprehend, when can they start getting answers? What can be done to sort of get banks moving quickly? One of the complaints, even from SBA people, the banks were really quick to take that bailout money in 2008 when they needed it, but they seem to have an awful lot of concerns, and there seems to be an awful lot of regulations. They want to make sure every I is dotted and T is crossed before they get involved with this. And so I think a lot of the growing frustration is, hey, those big banks were willing to take it pretty fast when the financial markets were collapsing. Here, they seem to be very wary of liability issues.
This program has been incredibly generous in that it is offering a 100% federal backing. Normally loans like this would have a 75 to 80% federal backing, therefore imposing some liability on the banks. Look, you're not going to hear me step up and defend any bank that took bailout funds and is refusing to offer this program to its customers. I agree with you, and I think that's unreasonable, but I'll also say that I expect that more of the concern that's being expressed in those questions, JR, is probably just the lack of information and uncertainty. But you've got to keep in mind, and it's why Ms. Bender and I keep making reference to this, in one day, this program accepted more applications than it did all of last year. And so we are seeing extraordinary attention and popularity of the program. We are every single day opening up new terminals or new portals through this e-trans system to be able to process applications faster. I think the most important thing is to get the applications into your bank, a bank where you have an existing relationship through a credit card, a loan, a checking or savings account. And if it does appeared like it's taking too long, they can reach out to our office. We're happy to see if we can try and get some information for them as well. But I understand the urgency here, but I think we do have to recognize the volume of traffic that we're talking about right now, and that an entire year's time effectively passed in one day in regard to the volume of loans that were processed at these banks.
And I want to be clear. When I mention banks, I'm just using banks in a generic sense. Look, credit unions are processing PPP. So, you know, and look, if you have a bank and you also have a card with a credit union, go to your credit union. You know, maybe they can, maybe they'll get it going for you as well. One of the questions is, can you please explain how seasonal businesses can apply for the PPP loan program? This person has is president of a pool and tennis club, and basically they operate May through August, and so they're going to be impacted by this virus. So is there general rules or guidance on seasonal businesses?
Do you want to take? I'm
no,
happy
just say that it allows for a shorter period of calculation for your payroll, but Renee, please.
Yeah, so the business can choose either a 12-week period that starts on either February 15th or March 1st to count their payroll costs, understanding that a lot of seasonal businesses tend to be most busy in the late spring, summer months. So that's what's in the bill. I think certainly we continue to hear from folks. You can still use, you know, if you're in the off season during that period, you can still get some funding there. But we're really trying to get to those majority of seasonal businesses that are in the late spring, early summer. But we welcome feedback from folks on, you know, any enhancements that could be made there, or things that we should be thinking about if there's an opportunity to readdress.
And in the shameless plug category, for all you people who are firing off questions about wanting to know about Capital One and what its problems may or may not be, perhaps you should check out Campus Federal. So there's your shameless plug for the day. I'm just going to say I don't think anybody here is qualified to answer questions about the internal operations of Capital One. And so while we appreciate the questions, I don't know that either the Congressman or Renee are going to delve too deep into what's happening there. So we'll pivot to this question. If a tenant, so this person is a renter, and if this person receives rent payment assistance, are they then required to pay all of that money to the landlord? In other words, can a landlord demand payment from a tenant who is receiving rental assistance? Any thoughts on that one?
I guess I'd have to check and see the rental assistance program that they're receiving funds from, but also on March 23rd, the Federal Housing Finance Agency did offer some relief to multifamily housing or building owners that have multiple tenants. Did provide some relief to them for if they have loans through the enterprise, through Fannie Mae or Freddie Mac, to give them some flexibility or some ability to defer payments on their mortgage, therefore allowing them to grant some relief to their tenants. But if those folks want to reach out to our office, happy to track down the actual program and what responsibilities they may have under any assistance they're receiving.
How do businesses organized as partnerships apply? At the partnership level or partner level, is partner compensation counted?
There was additional guidance that was issued on April 6th and then improved on April 8th that I think speaks to this, but Ms. Bender may want to provide a little bit more detail.
I think we didn't, there's no, in the law, again, in the law, and I think it's been interpreted this way thus far, you know, from Treasury and SBA, is that you count the salary, you know, salary of up to $100,000. So you prorate whatever the salary is. If someone's getting paid $150,000, only their salary up to $100,000 may be covered. And certainly, again, going to the point of getting that sole proprietors and self-employed and all of those folks are covered. You know, that I think this would be a further question of interpretation. But generally speaking, if it's part of your payroll cost, you're looking at your payroll cost over the average payroll cost over the last year. So calculating all payroll in that number.
Okay. And I think this may just be a clarification of a question we dealt with earlier. This individual gives employees 1099 miscellaneous forms instead of W-2s. That individual's financial institution is being told that those do not qualify for the program. Is that true? I think we may have touched on that. But.
Yeah, I think we did. That's correct. But the good news is that those people can apply directly to the PPP on their own, and also under the expansions of the unemployment insurance program Ms. Bender noted earlier, they also may be eligible for unemployment insurance. But of course, you wouldn't want to duplicate your recovery there, have double recovery.
Doctor offices are, quote, being held up, unquote, due to confusion on how to deal with owners with less than 20% ownership. Any chance to get some more guidance on how to proceed? I guess this will deal with these physician partnerships.
So as I recall, it has to do with the ownership structure, and meaning if that partner has the ability to actually exempt control or veto over a business. So it does get a little bit complicated, but I'll again refer folks to the April 6th frequently asked questions or guidance issued by Treasury and SBA that was updated on April 8th. I believe that there's a question in there. It's question number 6, if I remember correctly, that does provide a little bit of clarification on that. In addition, on, and Renee may be able to correct me, but I think it was Friday evening, there was a 16-page document that was released by SBA and Treasury that provided a little bit more verbose answer in regard to affiliation rules on this, but it really depends on the structure of your company or organization.
And I would just say that my experience with SBA in terms of, the reason, one of the major reasons that this program is structured the way it is in terms of utilizing the SBA 7A program is because that's a process, a system, and infrastructure that is already in place. So what we've seen is the loans that the banks that were ready to go, that were making loans and approving loans on Friday, were largely those community banks that are 7A lenders in SBA's system. So the ability to kind of get the program running and then build capacity through SBA and Treasury approving more lenders. And so SBA generally has in the guidance that I have seen and looked at, has generally kind of relied on the regulations and the standard operating procedures that they have for the underlying 7A program when applying certain things that we did not specify in the law to the program. So generally SBA tends to they don't tend to look at ownership issues until you hit 20%. So I think that would be a question too, of if it's less than 20%, that has really usually been triggered by standard operating procedure and regulation when it's 20% or over. So I guess it would just question, is that less than 20% or not? And to the Congressman's point, there is some additional guidance out there that I think would be helpful for those 20% and over folks.
Broadening it out a little bit, once a company is approved, would wages paid to new employees, not rehires, but new employees that had been hired after the business submitted the application or the funds were received? So, I've applied, maybe I've even got my money, but I hire people I hire new people. I don't necessarily, either I bring people back and hire new ones, or I just hire new people. The question would be, are the hiring of new employees, does that help make them eligible for the loan forgiveness?
My understanding is yes, because obviously you couldn't force someone to come back to a job if they found a different job, better job, or decided that they wanted to stay back at home with the family. And so I think it was all about hitting the targets in terms of numbers, not necessarily the specific people.
Okay. It's been said in the guidance that lenders must fund within 10 days of SBA application. This, to some businesses, is a disadvantage. Those that have furloughed their employees and could use the PPP funds to bring them back are unable over the next 8-week period due to the shelter-in-place order. What are any thoughts? So I guess to broaden it out, they're saying, hey, look, if I get my money, but we're still in shelter-in-place, I can't bring people back. Government action, probably at the state level in this case, is preventing me from doing what's necessary to get loan forgiveness. Any thoughts on that?
Well, first of all, I'll go back to my comment earlier, and I believe Ms. Bender shares the perspective as well as her boss, that we do want to make sure there's maximum flexibility there. And obviously, safety of the community is paramount here in regard to stopping the transmission. And so we would never urge folks to break that order. Now, also, let's keep in mind that employees in many cases can telework. There's been extraordinary growth in technology, just as we're participating in right now in finding ways to adapt to the conditions we're operating under. And so the goal of this program is, just like it says, Paycheck Protection Program. And so keeping folks on payroll and helping the government providing some assistance to those small businesses to keep their employees online.
Renee, and I'm sort of going to bring a couple of questions together, but there are an awful lot of nonprofits here in East Baton Rouge Parish. And we get a lot of questions about, look, it appears that there are resources available for those nonprofits that are set up as C3s. But what provisions might exist for the nonprofits that are set up in some other manner, whether it's a 501c6 or, whatever else is out there? Any help for the nonprofits that aren't C3s?
So we do have, so the C3s are explicitly mentioned in the statute, as are veterans organizations that are organized as 501c19s. I would mention here that including nonprofits at all is a departure from SBA's historical practice. Nonprofits have been considered passive businesses and are therefore not eligible for regular 7A loans. So it's a departure in and of itself to expand eligibility to nonprofits at all. And so we're trying, the members were really trying, I think, to balance the need to offer some assistance to nonprofits while at the same time maintaining our edict here, which is protecting the paychecks of those small business employees that are out there. So at the top of the order every time is our role and our job here is for small businesses, but we were trying to provide some coverage to nonprofits and communities who may have a school, a daycare, or some of these other nonprofits who are providing services to the community. We certainly understand there are folks that were not included in that in those definitions that are struggling, and we have heard from a number of folks. So I certainly think that's a topic of conversation, and the congressman can probably speak more to that on what he has heard as well. But that was some of the conversation at the time when we were trying to get this done in a very, very speedy manner.
Yeah, important to note that the program previously didn't allow for it. We did expand it in here to allow for not-for-profits and veterans organizations. Treasury and SBA did a great job, I think, with some of their guidance recently to further expand or allow for churches and schools to participate in the program as well. But look, that questioner makes a really good point, because they're probably, I'm going to guess, associated with the Chamber of Commerce. And if we're looking to recover the economy, we do need some of those business organizations like our chambers to be able to be at full throttle or capable of going at full throttle to help us ensure the full recovery of the economy.
And from the hotel perspective, and I think this may overlap a little bit with a question we just sort of talked about, those in the hotel industry are nervous. Again, a lot of this has to do with the forgiveness timeline, and it makes no sense for them to bring employees back when you've got occupancy rates, below 20%, just to satisfy the loan forgiveness criteria. So again, I think we're going to probably double back and basically say there's probably going to be some flexibility on this on the back end as it relates to the loan forgiveness guidelines for certain industries.
Well, we're certainly working to try to provide that flexibility. And I think that it's a great point, just like the stay-home orders and some businesses can't fully open or return to full functionality at this point. And I think that it is something that makes sense, and we're going to continue working toward that flexibility.
Any idea on when will the final rule for partnerships and sole proprietors come down regarding calculations for the PPP?
I would just say, didn't want to speak over you, sir. I just would say that the applications that process is supposed to is going live tomorrow. And so we have urged Treasury and SBA to get that guidance out as soon as possible. keeping in mind, as we've mentioned a couple of times, this program was not law 2 weeks ago. So agencies have been working at a really feverish pace to get this information out. We know folks are eager to see it, and so we are trying to work as closely as we can with the agencies to get that guidance out as soon as possible. So I don't have a specific timeline, but we have been assured throughout this week that they are working very hard on it to get it out. So there's that guidance out there for when the application process rolls out.
When calculating payroll costs, are federal and state taxes included in the compensation cost, or what specifically can be counted in determining what someone's compensation is for the point of the PPP?
We do included in the law state taxes that are related to compensation, and in Treasury guidance they have also included some federal, such as FICA, included in the calculation of payroll costs. So I would say there's some provision in the law, and then there's some interpretation in guidance that I think it's helpful to kind of look at both of those things. But we're certainly trying to provide as much coverage as possible.
April 8th, frequently asked questions, number 7.
Yeah, there you go.
He knows it better than I do.
This one may be one as well. Is the loan forgiveness considered a taxable event?
It is not.
So
that is the what I mentioned earlier, that we do provide specifically that any forgiveness amount should not be counted towards gross receipts and ding the taxpayer in any way for tax purposes.
A question from Ms. Bender. Have the $10,000 grants started to be dispersed? I guess that would be for the EIDL.
I have not. I know that there are a lot of applications in. I will talk with my disaster policy counterpart who is handling the EIDL program. But I have not heard that any have been dispersed yet. Again, that was less than 2 weeks ago that became law. And certainly there you see some of the difference with SBA trying to stand that up. A big distinction between the PPP and what we've set up on the 7A side is really to try to enable to really provide this funding through the public-private partnerships that we have with banks who participate. On the EIDL side, that is all direct funding coming from SBA. So that's SBA staff, SBA resources. And so I think we are really trying to build capacity for PPP out, that process is just moving faster. But to my knowledge, I'm not aware of any grants that have gone out yet.
Are local government entities, such as a sheriff's office, eligible for either the PPP program or the EIDL program?
No, they wouldn't be eligible unless there was a 501c3 not-for-profit associated with the organization. That 501c3 could potentially be eligible. However, that doesn't mean that there's not assistance for local governments. Number one, the president early on approved Category B approval for, which is all the public measures for the state of Louisiana. He also did approve a major disaster declaration for the state. Right now, 75% of those costs are covered by FEMA. We expect probably as early as the end of next week, we'll cross over to a 90-10, 90% federal, 10% non-federal. Secondly, and I'm not going to go through every program, we provided billions of dollars to the Community Development Block Grant, Social Services Block Grant, for law enforcement, $850 million to the Burn Grant Program, first responders, Fire Act type grant program, and lastly, $1.8 billion will be received, I believe the Secretary said, by April 24th through the Coronavirus Relief Fund. The guidance or intent under the law was approximately 45% of those funds be distributed to local governments. The full Louisiana congressional delegation, House, Senate, Republican, Democrat, sent a letter to the governor last week that we spearheaded, asking him to quickly get on that allocation to our local governments to help them through this period as well.
A person who's a commercial rental property owner, and several of this individual's tenants have been unable to pay their rent because of they're furloughed or laid off, what have you. The individual is a sole member LLC and passed through the income on his personal tax return, but does not receive a W-2. The bank is telling telling him under those circumstances, he does not qualify for PPP mortgage interest and utility help without actual payroll. Does that sound correct?
No, it doesn't. I'll just say again, I know that because this is a departure from how the program's worked in the past, I know that some of the banks are operating under old guidance. It is absolutely the congressional intent that folks like that are able to calculate payroll in an unconventional manner by looking at their income that was drawn from the previous year and calculating that on a monthly basis. I also want to make reference to my earlier comments about some of the actions of the Federal Housing Finance Agency ordering Fannie Mae and Freddie Mac to offer additional relief to property owners in that case that they then can pass on to their tenants. And then lastly, I want to remind those tenants economic relief payment up to $1,200 per individual adult. And in addition to that, unemployment assistance that in the case of Louisiana, as Ms. Bender mentioned earlier, they would be eligible for up to $600 in a federal supplement on top of the $247 a week in payments that Louisiana Workforce Commission on average offers to unemployed folks.
A request to go into a little bit more depth on the correlation between PPP proceeds and unemployment compensation. This individual has read on several sites that PPP funds are used to keep employees working, but what about the 2 months of lost wages due to stay-at-home orders and business closures? And what if the economy doesn't rebound within the 10 weeks of PPP allotment? Can we still apply for unemployment benefits as 1099 contractors?
I just say yes, you can. Just the one thing you've got to be careful about is that it obviously is not the intent of Congress for folks to be able to double recover, draw both unemployment and a payroll check during the same period of time. And so unemployment, as was noted earlier, was expanded to state and local government employees, to not-for-profit employees, and to 1099 self-employed folks as well.
This is sort of getting off the PPP, at least. Can you give us an update on where we might be at with the fourth stimulus package? I know, and again, that's different from just sort of the additional money that may go into PPP. But I know there's already a lot of conversation about yet another stimulus package. Where are we at on that?
You want to grab that, Renee?
Well, I would say, or the number one goal is, as the congressman has mentioned a couple of times, is looking at funding for the PPP and making sure that small businesses have the confidence that funding is there for them. So that is, job number one in the short term. We certainly have all been seeing the same kinds of stories that we all have of conversations about a follow-up package. What that looks like, I couldn't say. We have certainly taken a number of comments and concerns and changes that people would like to see made to the PPP, and I'm sure other committees who have worked on other portions of the CARES Act are doing the same. And so right now we're just kind of taking in those comments, but we don't have any indication at this point what that looks like. That's certainly a leadership call for both the House and the Senate in working through that. But we remain committed to getting some more funding for this program. That's the chairman's first goal, and then working through what that may look like and how we can further help small businesses in any future package.
And JR, I think there are two major issues. Number one, this package that we've done, the third package, and you add up the other two, and you include some of the actions of the Federal Reserve, you're talking about perhaps $5, even $6 trillion worth of economic activity. Again, when you add in some of the actions of the Federal Reserve. So that's one factor. Let's see how that takes in the economy and what type of improvements or investments are needed after. Now, secondly is we need to ultimately let this thing play out to some degree. Are we truly bending the curve right now? Let's see the duration, the longevity of this, the impact of this in the economy. We can't just keep shoveling dollars out there, adding to the debt every single day. What we need to be doing is beginning to look at tailoring a long-term recovery package to ensure that we can focus upon those that need the dollars and not just shoveling money out the door.
Well, Garrett, your check's in the mail, because that was a great segue to what our next webcast will be next week. So I appreciate you. You've been trained well on how to tease for the next event. Congratulations to you on that. And with that, that'll bring us to a close for today. On behalf of Business Report, I deeply, deeply want to thank Congressman Garret Graves and Renée Bender, who is just absolutely fantastic, for making the time to join us this morning. I also like to give a tip of the cap to Campus Federal for making this event possible, and much appreciation to everyone in attendance for giving us a bit of your time this morning. As I alluded to, our next webcast will be April 15th, when we will explore what the Baton Rouge and Louisiana economies might look like in the aftermath of the coronavirus and the related mitigation measures. Look for more information on that via Daily Report. And finally, a video of this webcast will be posted later today. So check out Daily Report PM for that. Again, Congressman Graves, Renée, thank you, thank you, thank you. Great information as always. And to everybody out there, have a great day. Thank you for joining us.
Hey, thank you very much for hosting, and you and Rolf and Julio, Campus Federal, thank you all for the opportunity. And I got to give one more shout out to Senator Rubio and to Renée, really one of the unsung heroes of this. Thanks for your time this morning.
Thank you all.
Thanks for having me.